All right, good morning, everybody. Today is February 16th, 2022, and I'm back with another Wednesday edition of the live show. And man, there's a lot going on, and the market this morning seems to be selling off a little bit more. Um, so let's see, we're right in the thick of earnings season right now, and tons of companies coming out with earnings, and a lot of stocks, individual stocks, really getting crushed on earnings. So it's been a while, maybe a few years. I remember a few years back we had a sort of a similar earnings season where you'd get some of the big names would come out with earnings and get hit. It's been kind of a mixed bag with the mega caps, but a lot of the stay-at-home stocks as they call them, but a lot of tech stocks really been getting hit hard. And it's we'll take a look at a few of those. And so let's see what else is going on. the there's a lot of back and forth in the market as far as economic indicators, and of course the tensions in Ukraine is the big sort of issue right now. And so however that plays out, that's going to probably affect the market. So it's a really super risky time right now in the market overall. And when we get into the charts here, you can it's pretty clear to see. But everything's sort of in limbo, and of course there hasn't been a lot of activity as far as new swing trades, and so it's actually a good thing because it's been a pretty nasty market, and we've managed to basically sidestep the whole sell-off. But at the same time, there's not a lot of activity because here's the thing is like, getting into swing trades from, a couple of weeks to a couple of months. Typically after earnings season, you'll see things settle down a little bit, and then there'll be plenty of charts that'll start to set up. But right in the middle of earnings season here, it's actually been a minefield, right? And plus with everything else going on, right? The Fed is getting hawkish. Speaking of which, today at 2 o'clock, the Fed minutes come out. So that has some potential to spook the market, right? Because they've been talking really hawkish and aggressively about hiking rates. And so they're getting ready to enter a rate hike cycle. That's hard to say. Some of you may remember the old adage, 3 steps and a stumble, right? That's from way back when, probably before a lot of participants were even in the market. But the old saying, 3 steps and a stumble, meant that once the Fed raises interest rates 3 times, that the market tends to sell off. So we got that to look forward to. Anyway, so yeah, earnings minefield. The indexes, as usual, have obviously been holding up a little bit better than individual stocks. Um, let's see. Hang on. Let me pull up a couple other charts here. Here's a weekly chart of, I guess this is a good place to start. Weekly chart of the SPY that I've had this trend line drawn for quite some time here. Actually, well, back here, like last October is when we had the last little sort of dip, right? There was literally no dip last year. I mean, I think it was less than 5% if I recall, but things are looking a little precarious here on the weekly chart. Obviously, this is the big pandemic sell-off, and then the Fed rescued the market back over here, and it just never looked back, right? And consequently, as hawkish as the Fed is, and talking about rate hikes, and everyone's trying to decide whether there's going to be a half a point or a quarter point, and how many rate hikes there's going to be this year. So it's pretty inevitable. Yesterday, the PPI, the Producer Price Index, printed like 9.5% inflation, which typically is sort of a leader of the CPI, which I believe it was last week. CPI came out 7.5% inflation, headline inflation rate, which is, it shows that the Fed's way behind the curve. And so they're still, as we speak, they're still they're still putting QE money in the market, still buying bonds and all that. Inflation is 7.5%, and of course, and everybody that goes out shopping, all these companies are using this inflation to raise prices, and so things are pretty nasty. The Fed needs to get aggressive, but here's the thing: is at this point, raising rates may or may not be the solution for inflation. So anyway, let me find one of my SPX charts here. So the market's in a pretty precarious spot, right? The macro picture is kind of nasty because the Fed is getting ready to, and these big Wall Street investment firms are talking about, 4, 6, 7 rate hikes, and so they're going to need to, and here's the crazy thing is that the Feds first they said that there was no inflation, and then they said that they didn't believe that there was going to be any inflation, and now you turn around and a year later inflation's out of control and interest rates are still basically nothing, right? And so, they pretend they have the tools to fight it, but raising interest rates, I mean, the only thing that's really going to bring down inflation is a recession, right? And so theoretically the economy is already slowing down, and so they missed their best opportunity to sort of tighten monetary policy is what everybody's thinking. And so, we're kind of in a quagmire here. And there's a lot of correlations to the Fed balance sheet, how much money the Fed has been expanding their balance sheet and the stock market. So some will say that's been the main driver of the stock market. And of course, earnings, there's a lot of pieces to the puzzle. But anyhow, well, it's kind of a mess, to tell you the truth. So let me see if I can get my chart fixed up here. These stock charts have been acting weird today. For a while there, they weren't getting any quotes, but anyway, this is not the chart I was looking for. Let's see if I can find the chart I was looking for. That's not really it either, but I'll go with that one since this has a 50, a 100, and a 200-day moving average on it. So anyway, you can see the S&P is, well, yesterday it closed above the 200-day, this blue line, and today it's trading below the 200-day, and a lot of really weird sort of up and down action here, right? I mean, this is kind of a mess right here. So, I mean, you had the big sell-off and sort of the panic low reversal, a lot of chopping around below the 200-day, and then big 3-4 day rally out of the sell-off, right? Sort of right back up to where it started, and then look at this gap down here, this little dip, and then rallied back up, and now you've got the Russia-Ukraine situation, which by the way, last week, I believe last week, there was a bunch of news headlines that today, the 16th, was the day that Russia was going to invade, which seemed kind of weird to me that they would announce that. What's even crazier, everything that I'm reading about it is like, sounds like the news media is being given every little tidbit of information, as soon as it happens, which kind of doesn't make sense because why would, I don't understand it. I mean, typically, the public is the last to know what's really going on. So it kind of doesn't make sense, but it's definitely a weird sort of situation. Hopefully it will resolve itself. I think it was back in like 2014, end of 2014 into 2015, you had a similar situation going on, and it spooked the market for a short amount of time, and then it was out of the news cycle. It was gone. But anyway, so, here's the all-time high back over here, right? And then there's the, roughly 10% sell-off. And so the market's been struggling to sort of battle its way back. And the funny thing is that, pull up SPY here. I think the SPY's, there was a big area of resistance right up, I say 460 on the SPY. and that's sort of where the sell-off really gained steam, right? These highs, we got the initial sort of dip and bounce, and then we started selling off here, and the highs these couple of days here, and then even this day where it sold down. That's kind of was the major resistance on the upside, and so the market really sold off dramatically and then rallied all the way up to that resistance area, and I'm sure kind of probably sucked a lot of people back in, and then a little backing and filling, and then look at the gap up. That was last week there was that gap up and then sold right back off, and so here's the SPY perched right on the 200 day. Of course the SPX is below it, but it's really kind of a precarious spot here. I had drawn like this overhead resistance line on the SPY based on these two highs back here. And as you can see, that let me see when that was. So that was on 2/9, which was last Wednesday, a week ago. You got that little sort of fake out break above this trend line that everybody was watching, right? And that was, obviously that was sort of what they call a bull trap, right? Because you got a trend line break, you closed above it, you held above it, and then the next day there was a big gap down, right, below it, and so it's still a pretty good overhead resistance line, but I'm gonna say my chart's getting all wonky again here. Let me see if I can fix this because I'm going to adjust this trend line here. Now that we have a better sort of point here, I think it makes sense to bring this trend line up across this recent high here and bring that down. Yeah, that looks pretty good. Let me save that real quick. Boy, I sure miss my old charts. It was a lot easier to work with them. But anyway, so there you go. I mean, and of course there's no moving averages on here, but there's the basic overhead resistance line right now. And theoretically, in real life, until the market can break above that overhead resistance line, and I really meant to extend that. There we go. Until the market can break above that line, then you got to err on the side of caution. That's just sort of makes sense. And I mean, here we are. Look at this is the beginning of 2022. We were right up at the all-time highs to start the year, and so this is turning out to be a pretty rough start to a year. And I remember back in January, they were talking about, worst start to the year since, such and such. So there's a lot of records being made, right? Like highest inflation in 40 years. And so, there's certain periods of time you can look back to sort of get an idea of perhaps what to expect. 2018 was a very similar year in that the Fed, was embarking on a series of rate hikes, and boy, they were just like slow, and then you'd think they were going to hike rates, and then they'd skip it, and something would happen, the market would sell off, or there was a slowdown in China, different things. And it's back when I guess Yellen was it Yellen? I don't remember if it was Yellen or Powell still, but anyway, back in 2018, you had a very similar situation. The S&P actually ended the year down like 6.5% on the year. In 2018, it was like the best start to a year. January was just a huge rally, and then the year ended up down. And so anyway, I read an article about the January effect, and it's basically a coin flip. So it doesn't hold a lot of water as far as probability goes. But anyway, so I mean, here we are. We got this overhead resistance line. Market's kind of struggling. If you drew a halfway point between the high and this low, we're a little bit below that halfway point. That's going to be up over here. So if for some reason the market's able to stage a big rally, then who knows, right? But I know it'll break this trend line. So there's a few stocks I wanted to look. Oh, real quick, might as well look at the other indexes while we're here. So the Qs have a really nasty sort of pattern here. I mean, I guess this is you draw a trend line and connect these lows here. Bunch of overhead resistance it tried to rally up into. The Nasdaq's really sort of been ugly, and tons of Nasdaq stocks, particularly look at Facebook or Meta or whatever you want to call it. I mean, what a disaster, right? They came out with earnings, and obviously you guys remember this. The stock lost like 25% overnight, and the crazy thing is, typically stock like this, mega cap, loses 25% overnight. Typically you get a few days of consolidation or whatever, and then a bounce back up into the gap. I mean, that's a massive gap. But look at this thing. It's just continued to sell down, right? And so this just shows you how dangerous this market is. Look at this. You had the gap, and then 3 days down, and then like a pivot low, like a perfect pivot low. And so this very next day, I'm sure people thought, well, that's it, that's the low. And so look at where you are now. And even look at today, down another, well, it opened like down, 4%. And so anyway, just brutal sell-off in this. If you look at where it came from, $380, and now you're down here at, 216. Just really nasty. And speaking of earnings season, so Shopify came out with earnings, I guess, after the bell or this morning. Let's see, I've got a Shopify. Yeah, they came out before the open this morning, and look at that, down 18%. Big gap down and a sell down. And so, there's tons of stocks out there like this. This is what really is kind of going on under the surface. So, the high over here was, let's see, what this high over here was, $1,763 back in November. 17, and the stock right now is trading at, 731. So it's lost more than half of its value. I mean, more than half, down over 50% since, I guess that was November, was the high, since November. So just incredible damage and destruction there. And see another stock that came out with earnings, Viacom. Look at this thing. It was actually, it's sold off with the market, had a couple of decent bounces, and now it's down 21% this morning. Look at that, 21%. And, back to the, this thing's back to the lows. And so I don't quite remember what in the world was going on over here, but this really skews the chart. But so you got to take that off the chart to get the full effect. See another company that came out with earnings either last night or this morning. This Roblox has been like sort of a favorite, right? I believe it's a metaverse stock, as they say, and and here you go. Here's another kind of a popular tech stock. There's $140 trading at $55 here. More than half of its value, boom, erased since, basically. And the interesting thing about it is the high here is about the same, happened about the same time as the high on Shopify too. And so, I mean, it's just a minefield out there, right? Look at this. Here's a stock that came out with MASI, Healthcare Medical Equipment. These guys just released earnings, either last night or this morning. I'm not sure. And here's another one. This thing was $300, going into this year, and then look at today, down 32%. And so anyway, these percentage hits that some of these stocks are taking are just incredible. I mean, I see it all the time. I mean, I just look at the ticker and I see I see these tech stocks. Well, this is an expensive one, but I just saw it was down 11 bucks. But anyway, um, just a lot of carnage out there, right? Um, I wanted to look at their Square, or I guess they call it Block now. But this is sort of, this is typical of a lot of those high flying type of stocks that we look at. Square, PayPal, same sort of thing. And here's the thing: there's a lot of people in the market right now, participants that they weren't around in the .com days. They may not have even been around in the 2008 sell-off or whatever, but haven't been doing this long enough to realize that these kind of stocks, I mean, yeah, these kind of stocks don't, they don't just recover back to their highs anytime soon, right? I mean, so you got to, our whole thing about always using stop losses and not holding over earnings and that type of thing is a lot of people are going to learn that as a hard lesson because they like to buy in. They like to buy into these high flying stocks thinking, I mean, hey, you could probably, there's probably a lot of, you could make a bull case for PayPal or Square or Block, and I'm sure that, and actually there's a lot of companies out there that you could say, hey, this company's growing and this and that, and but when the price sells off like this, when a stock loses, more than half its value, then the odds, it reminds me of like, these AMC people are sort of nuts. Um, right? Look at AMC there. I mean, there's a whole, there's a lot of young people that think that this stock is. I remember it was like a year ago, over a year ago. People out there saying that this thing's going to, to the moon. I mean, price targets $2,000 and all this, and they think that there's a, there's a shorts or whatever. I don't even, you've probably read all the articles, heard the stories and that. But anyway, long story short, I guess this is going to prove my point, is that, don't hold your breath because stocks like this, when a stock loses a significant portion of its value, it may or may never come back, right? I mean, I could show you a monthly chart of a bunch of stocks that still haven't hit what they were back in 2000, right? Like GE is a good example. Citigroup. If you look at a monthly chart of that and you look at like 2008, these stocks never come back. Look at Roku. This was another sort of tech favorite, and um, just incredible. I mean, incredible percentage sell-offs, which it's every now and then it's interesting to look at it, but you can just go across, sort of all the darlings and the favorites of the, it's kind of like a behind the scenes .com implosion. I mean, you got a huge amount of companies that have lost over at least half their value, 30 to 70% of their value, and I mean the market itself has held up pretty well, but I'm seeing a lot of bear flags, right? Like I'm not going to draw it on here, but you just draw like a couple of uptrend lines across sort of these highs and these lows, and it looks like a bear flag. That doesn't necessarily mean that it's going to break down. I mean it could rally and sort of cup up a little bit, but it's almost like behind the scenes, and it's been like a stealth sort of bear market, obviously. And of course, let's look at ARK here because ARK is, I guess, the basically sort of the poster child for all this type of stuff. And here you go. So ARK is basically, lost half its value, a little bit more, and it's sitting right here with sort of a bear flag. Maybe I will draw that on there just because it's so tempting to want to, just to want to draw this. There you go. So you get the idea, though. There's your little sort of bear flag, and um, we'll just have to see what happens. I mean, that doesn't mean it can't rally back up or whatever, but it's zoom out a little bit. That's as far as I can zoom out. Yeah, this sort of move off the pandemic low was basically out of control anyway, right? But from what I see, ARK, what they like to do is, they hold a bunch of these high flying tech stocks that have been crushed and are getting crushed, and what they do is they keep buying more and more and averaging down on them. I mean, some of this stuff's just crazy. Look at this teledoc, which is still, it's a great idea. See, that's the whole thing about the story. Way back when I first started doing this, stocks traded in fractions, and it was always about the story. It was towards the middle of the dot-com days, and there was a lot different information out there, but everybody was playing the stock market similar to now. You had the public really involved, and there'd be all these stories that would come out on CNBC and all this fundamental stuff, and you'd have, just like now, Motley Fool's advertising on CNBC again, and they dig into the story, right? And so you take a company like Teladoc, great story because people can, I guess, just dial into a doctor and get a diagnosis or a prescription. They don't have to show up to the office. I mean, technology revolutionizing doctor's appointments. Hey, it's a great idea, right? And it's awesome, but that doesn't necessarily mean that the stock itself is going to just keep going up forever, right? And so there's a lot of these things. What's interesting about this chart is that, this is kind of like the primary downtrend here. This whole breakup, like you had this downtrend, this whole move right here, just absolutely insane, straight up move from 200 to 300, right? So at the beginning of this year, and I don't know if this was based on earnings or what this was honestly based on, but all of a sudden, you had this stock that had gone up, significantly, right? From 50 to 250, and then it kind of cracked and started pulling back. And then for whatever reason at the beginning of this year, it rallied the thing 50% in a short amount of time, from 200 to 300 in very short amount of time, and then all the way back down, and now look at the thing. And so just craziness. I mean, just all over the place. You see these stocks that just been destroyed. And whether they're coming back or not, hey, whether stock like that, I don't know if it'll ever go back to those highs. So, but if it does, it's not going to happen anytime soon. So I think you got a lot of institutions and hedge funds and like ARK, ETFs and that are just buried in some of these stocks. And this used to kind of be one of my favorites here, this AMD. As a matter of fact, we caught like a nice chunk of this rally here before they came out with earnings last time, but this thing's kind of cracked too. This actually, I look at this chart, it looks almost identical to the SPY, in a way. It looks very, very similar. Um, but, humongous sell-off. Yeah, I guess there's potential here. Oh, speaking of which, Nvidia, Nvidia is the one everyone's watching tonight because they release earnings after the bell. And so, that's a pretty big sell-off there, percentage-wise, and then a rebound. So it's hard to really say what's going to happen with the markets. I want to take a quick look at the Dow. Let me go ahead and just pull up the actual Dow here instead of the ETF. And I just wanted to sort of point out what a mess this is, right? I mean, if you look at the current just under 35,000, draw a straight line back, you're going back to like last May of, so like spring, it's basically like spring of last year. you've been above and below 35,000 a lot, but this is not a trending market, right? There's no trend here. Well, I suppose, identifying a trend, like you could say in the short term, year to date, the trend is down. I could obviously, draw that downward sloping trend line across the highs. Um, we're up from the lows, but if you go back to, well, hang on, let's go back 1 year exactly. And so, it's a bit higher than it started off like 1 year. So I suppose you could draw a line from there and up here and say the trend is up. But if you go back a little further, right? If you go back to I'm sorry, not back. If you go forward a little further, like to May, there we go, because that's where I was looking at. So if you go to, instead of going back 1 year exactly, if you go back to last 8 months, 9 months, you'll see that there is no trend. It's just a bunch of chopping around. And something like this, it's tempting. It's very tempting to. I usually draw these trend lines when I'm in full screen. It makes it a little bit easier. But just for the fun of it, I wanted to draw. There we go. And I mean, hey, I've seen these megaphone patterns in the past. People talk about megaphone patterns and um, say different things about them. But anyway, I mean, that's kind of where you are. And so it's just a nasty overall environment. And obviously, there's quite a few stocks. I mean, energy's been doing pretty good, but it's extremely volatile. And with oil, I didn't see what oil was today. I'll probably see. Oh yeah, $94 a barrel. Um, with oil at $94 a barrel, it's amazing that the market's holding up so well because that's starting to filter out to the gas pumps, right? And I just saw this morning that they're paying like $6 a gallon out in California, which is crazy. I mean, I can't even imagine. I can't even imagine like what filling up a tank on $6 a gallon would be. But even around here, gas about 350 something, 354, 351, 357. But if it starts creeping up towards $4 a gallon, then all of a sudden, I think at this point in time, $4 a gallon is probably the line between people actually cutting back on doing stuff and going places and that because everything's getting more expensive. I mean, hey, my mom, my girlfriend, people I talk to that don't follow the markets or pay any attention. I mean, inflation is affecting every single American, whether they know anything about economics or the market or whatever. And quite frankly, I've been going to the grocery store, and it seems like if I go to the store, every few weeks the price of something goes up a little bit. I mean, a little bit here, a little bit there, and a lot of stuff that's already inexpensive and cheap. Stuff that's like 229 goes to 259 and then it's 279 and 299, but people are really starting to notice it, and they're getting mad about it. So anyway, the market itself, the Dow's in just sort of no man's land here. I mean, just the over under I guess is 35,000 on this, and hey, who knows? I mean, if we could see we could see a huge relief rally. Like if the tensions between Russia and Ukraine de-escalate and nothing happens over there, the same thing that happened back in 2014, right? I believe in 2014, 2015, though, they did actually take over Crimea, but for whatever reason, the media was just like pounding the war drums and, all this geopolitical stuff, and it was a big crisis. And then literally like 2 weeks later, couple of weeks later, the market had a big rally. It was gone from the headlines, and you never heard anything else about it. And I think we went from that into the Greek debt crisis or something. But anyway, it's kind of funny how it's funny how the media, especially like CNBC, chooses whether to, you know, whether to make a big deal about something or whether to just sort of ignore it and then it disappears from the news cycle. So, wouldn't surprise me if we had something similar, right? But you still got the whole Fed thing hanging over. That's hanging over the market big time, and so a lot of people I think um, are going to try and play this thing up until the March Fed meeting. So, and by the way, be careful today because, like I said, the Fed minutes come out at 2 o'clock, and depending on how hawkish the tone of that was, which I would guess, I mean, all the Fed people typically are extremely hawkish, but and here's the other thing is that the market participants are losing. The Fed's lost a lot of credibility, right? I mean, they pretended that there was no inflation while prices kept going up for years. Every time I'd go to the grocery store and everything goes up, goes up, goes up, and the Fed's like, we need to get to our 2% inflation goal, right? And for it seemed like for years that that they were all worried about their 2% inflation goal and the CPI. Somewhere I got a CPI chart, but I wasn't believing it at the time, tell you the truth, because I go to the store, and prices were slowly but gradually rising, and so I think that that below 2% CPI was a joke to begin with. And then, of course, the pandemic, they blamed the supply chains and they threw trillions of dollars. I forget what it is, but there's all these stats. I can't keep them straight in my head, but something like 6, 7 trillion dollars of money has been created, in the past couple of years. Stats like 20%, 30% of all the money, all the U.S. dollars in existence have been created in the past couple of years or whatever. I mean, that's where inflation comes from, right? Inflation is, and that's like old school, Austrian economics basically says that inflation comes from, creation of increase in the money supply. And so, anyway, it's kind of a mess. And then, of course, there's inflation. Theoretically, some inflation is good for the market and good for the system, but the Fed let the genie out of the bottle. It's out of control now, and a year ago they were saying, oh well, inflation's high, but we expect it to moderate. It's coming back down, and transitory, all that kind of stuff. And so at this point, I mean, when the CPI print came out at 7.5%, I think that was a big shock. Quite frankly, I'm surprised that the market's holding up as well as it is, because it's going to be very difficult for them to bring inflation down. I mean, what's going to bring inflation down is going to be a recession, and the market's certainly not pricing in a recession. And they love to say that it's already priced in, this and priced in that, all these rate hikes, but I don't think that it has. It just doesn't seem like it possibly could have, this is not pricing in like, 7 rate hikes or whatever. And we haven't even talked about how the rate hikes are going to affect mortgages, right? And so home prices have been going nuts. I mean, you talk about like the CPI, but I mean home prices have been have been kind of like this, right? Like straight lines up. And so we're in kind of a macro quagmire, and I would err on the side of caution. However, with all that said, there's still going to be lots of opportunities in individual stocks once this earnings season starts to wind down. Now, where was that picture I had? So, yeah, I had this is the most anticipated earnings releases for this week. And you can see we're still right in the thick of this, right? And from what I've seen, and I showed you a bunch of charts, from what I've seen, it's a minefield out there. Company releases earnings, and you got a chance that that sucker's going to sell off, 30% overnight. There's just absolutely no way that I would want to get into any of these stocks ahead of earnings, right? Now, obviously there's some of them you just see like a huge move up, that type of thing, but it's just not worth the risk. It's like a coin flip, right? And I've always thought that. Now, here's the thing: if you're long-term invested in a company or whatever, obviously you're holding it. Oh, I want to see what Crocs did this morning. Let's just for the fun of it. Let's see how Crocs reacted to earnings. Not so good. There's another one, down 5. It's only down 5% because it rallied off the open. But here's another. Here's just yet another stock that towards the end of last year was trading for 180 bucks, and then it's down here around 90. And so a lot of stocks have lost half their value in a short amount of time, and to me that's that's kind of a warning sign. Right? I mean, that tells you to sort of be cautious. I'm sure that some of them. Now, this is not a tech stock, fortunately. So, but I mean, look at the move that this thing made. Crazy. So people have always loved footwear stocks for whatever reason, right? So let's see how Nike's performing in this market. Yeah, Nike kind of that's a weird looking chart there. Kind of a big double hump, double top thing, and now it's finding support. Right where it should. Um, but hey, I mean, Nike's sitting in the same place it was basically at the beginning of 2021. It's a little bit higher, but if you draw kind of a straight line across there, it's kind of how I visualized it. I mean, yeah, this thing, and there's opportunity cost too, right? I mean, people obviously, Nike's been a great investment for a long time. You go to a weekly chart of this thing, and the further back that you bought and held Nike, the better off you are. But at the same time, um, you know, new participants, new investors to Nike have basically, well, I guess if anybody bought down here, they're still up a little bit, but the point of it is, and I've made this point a lot of times, I mean, everything, whether a stock is good or bad or whatever, is all based on an individual's cost basis, right? So anybody that bought Nike higher than, where it is now over the past couple of years is not happy about their investment. It's not a great investment because it's down, but anybody that bought and held it longer term is doing fine. As long as we're on weekly charts, I'm going to wrap this up here in a second. I just want to go back and look at Facebook because to me, this is just incredible. I mean, just incredible because the market cap of this thing, I'm pretty sure Facebook was like right up at $1 trillion market cap up at the highs, right? Didn't they cross $1 trillion at some point? And to see this thing down, 30%, and not even catching a big rebound yet is just incredible to me. So, I mean, this was a huge institutional favorite, right? This was well, the FANG stock, right? This was the first FANG stock. So anyway, yeah, it's kind of it just shows you. Now, so would this be a good long-term investment? Geez, I don't know. It's sold off big. Well, that's the pandemic sell-off. Let's look at maybe I can get there's the whole history of it. Yeah, there we go. 2018 was a pretty rough year. I was alluding to that earlier. You see a couple of big sell-offs here. Like in 2018, sell-off from the high, very significant. That was the pandemic sell-off, so that's hard to really it's yeah, it's just incredible to see a monthly candle that looks like that. It's not going to surprise me to see it bounce, but people have been thinking the same thing now, and so it's institutional liquidation. That's kind of what it looks like there, and I for the life of me, I mean, yeah, um, it looks overdone, but hey, you never know, right? See, here's the thing: is the market is like holding up pretty well, right? I mean, the S&P. We'll go back to SPY on this monthly chart. I mean, yeah, we're still like way up here. And by the way, this monthly candle here is kind of interesting because and I hadn't really looked at this yet because we're about halfway through February. So look at January. January is pretty nasty. I mean, sort of, it made a little bit higher high, it looks like, and then sold down and took out months worth of gains. And now we got a little inside month here. It'll be interesting. I love looking at the weekly charts. So it's kind of weird to look at, a monthly chart in the middle of the month, but it'll be interesting to see how it closes. But anyway, the weekly chart kind of shows where we are here. So this could go either way still, right? But I'd be cautious as long as it's below that trend line. And obviously, like this low here that's the one everyone's watching. So, I mean, if this market's going to really sell off big time, then it's going to break that low from a few weeks back. So, and I'm not going to say a panic sell-off, but it was pretty nasty, right at the lows there. I mean, this was a pretty big sell-off, and then it started getting really crazy. These ranges have expanded so much that it's nuts anyway. But anyhow, be patient. Once earnings season starts winding down and we get a little bit of resolution and some of these other issues here, then I think that there's actually going to be, we're not really bottom fishers, but there's going to be some good companies that their charts get set up, and it's just tough to do this during earnings season. But anyway, thanks for tuning in. I will see you back here next week.